This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy, Camel. And excuse me if you hear some, I'm babysitting again. If you hear some baby noises behind me, that'll be my baby. So, today I want to quickly point at a couple of things pertaining to top calling indicators. Okay, we're going to check in on FOMO Finder, have a look at some bullish Bitcoin charts, and also have a look at some cyclicality, because there's a pretty nice visualization I got to show you today at just how little time is left if this 4-year cycle is going to repeat the way it has done previously. And then, of course, we'll check on some charts and see if we've got any tradable swings shown up yet for Bitcoin. As a quick reminder, there is just 6 days left to grab hold of the Camel Finance indicator at the discount price. There is a discount code you can use, and go and check all of that in yesterday's video or this Twitter post if you are interested. I can also see some new eyes in this channel and in this space. If you have not learnt the rules of cycle theory, please go and watch the cycle tutorial in the playlist. There are countless resources on this channel for you to learn how cycle theory works, and that way at least you'll be able to understand what you're looking at. Because I can see a bunch of people saying very silly things such as, how many more cycle lows do you want, right? And of course, those of you that know the rules know how funny this statement is. So if you are new here, okay, there's really no point being here if you don't understand how cycles work. You may as well go and find one of the many other channels out there. So please do take some time to understand what you're looking at before you try to engage with this community. Digging into today's episode, I've noticed that there are currently 0 out of 30 market cycle top indicators having been fired, which makes me wonder if this thing is kind of broken, right? Something I much prefer, however, is the CBBI, which currently sits at about 75. And if we take a look at the hard right edge, okay, we've kind of made the exact same type of rejection at resistance, if you want to call it that. Maybe if I get this pen thing here and draw a little resistance line here. But notice the significance of this level here, okay? Each time we bounced off of this level on the CBBI, Bitcoin topped and entered a weekly cycle decline, right? Topped for the weekly cycle, pulled back to a weekly cycle low. Is that what's happening here? It kind of looks like it to me. I still am really cheering on the idea that we're about to find that daily cycle low any day now. I'm pretty sure it's probably in, if not today or tomorrow. We're just basically waiting for it to confirm, right? We're waiting for the swing, the trend line break, the press across, all of that normal stuff. And then the indicator will pick the low, and it should be go time. And thus, I hope that we've got one final daily cycle of upside here. That should be enough to break through this resistance on the CBBI, and then we can start to really entertain finding some tops. FOMO Finder is currently balanced, okay? But when we scroll down to the chart, we did briefly touch some purple here in panic, which is usually what we see into these kind of major swing lows. So it maybe speaks to having to have one more decline, like a quick flush, maybe below 110. I'm not entirely sure just yet. I did say I didn't expect this low to trade below 108k several times, and I don't think we've done that yet. But all we really need to do is have a little bit more patience, wait for that swing reversal, the confirmation, as I said. Hopefully we can maybe get a bit of purple. That would just set us up for more upside if we can. But overall, there's really not a great deal of change, as you can see, right? We've been saying the same things for a while. I think that's why some of the noobs on the channel are getting a bit frustrated, because they don't understand the confirmation component, right? But we are edging closer to it every single day. And for those of you that are saying this probably feels like the most boring cycle ever, it's not really just a feeling, it's actually a fact, right? Bitcoin has entered a critically low volatility on historical volatility more times than any other cycle. No cycle has visited critically low volatilities at all-time highs. But boring is good, right? All moves into low volatility precede big volatility expansions, and every move into low volatility we've seen this cycle has been bullish, with no exceptions. So notice every single one of these low volatility moves down the bottom coincided with volatility expansions to the upside and very good things happening to the price of Bitcoin walking forward. And we just so happen to have that here, okay, right into that daily cycle low window, ready for the push once this thing confirms in the next day or two. And really, I didn't even know this, to be honest. I found this yesterday and I was pretty blown away by this, because what is happening right now is exactly what happened every single year at Jackson Hole. Now, if you know me, I tend to only focus on the cycles, right? I don't really care about the Jackson Hole stuff. I just kind of mock it, say expect some chop games and volatility, and we move on. But it's pretty interesting that the prior 2 Jackson Holes yielded the exact same pump, dump, cycle low and go, right? Pump, dump, cycle low and go. And what have we got this time around? Pump, dump, cycle low, any day now, and then go. Like I said, we're just waiting for the confirmation. There is a reason, of course, that we don't just stab in the dark and say, well, it's day 60, time to buy, okay? Because as we know, cycle lows can overextend every once in a while, okay? And that's why it's important to wait for confirmation and a trend line break et al. Of course, most of you already know this. I am just trying to make this available to everyone, especially the newer guys that are showing up here. But really, I thought this was pretty interesting, right? I mean, Jackson Hole doing Jackson Hole things, apparently. So that's cool. But also, of course, it means that probably what comes next is this. So again, being open to that until such time as we start to see something change in the charts. It's also a very similar setup to back here. First of all, we set this bullish megaphone pattern, okay? That's what this is right here. As you'll see, we connect the highs, connect the lows, and we get this big megaphone pattern. Then we put in a fall-in wedge that ultimately leads to a big breakout, retest resumption at the top, and off we go. And so far, of course, we've done pretty much all of this now. We've set the megaphone here, okay, and here. We've also put in the falling wedge right here. So all that's left to do now, like I said, is confirm that cycle low, get the breakout, move up here, breakout, retest, resumption, and off we go. Party time. But I do want to, again, beat that same drum of reminding people that assuming cycles are going to keep doing cycle things. Personally, as a cycle trader, I'm pretty sure they are. Okay, I don't want to bet on this being the first ever 4-year cycle low that just doesn't show up. Okay, if anyone else wants to bet on that, by all means do it. Okay, but for me, I'm no way going to say, well, this is going to be the first time ever. There just will not be a 4-year cycle low for Bitcoin. And as such, it means we are getting into that timing window now to start to expect the major top to come in. Now, here's a very nice illustration of this. These are each of the cycles aligned from the bear market low, okay, forward. And that is the correct way to do it. Remember, the correct way to measure the cycle is low to low. And you'll notice the 2017, the 2021 cycle, and today's cycle, all around that kind of month 35 topping window. Now, measured in time, it means from the bear market low of 2022 to today, which is this black cycle, okay, the black line here, that's our current cycle, we've already used approximately 95%, right? We're in the final 5 to 8% of this bull phase. Before then, it is time to start to head for that 4-year cycle low. And I know it kind of seems and feels impossible that we could have a big move to the upside here. I know it kind of feels like that right now. I know the sentiment is slowly but surely dying. A lot of people really think this market has topped. I'm seeing a lot of people talk about this January being the top, and this whole thing is A, B, and then looking for the C leg down, right? I can see if my mouse will work. I did order another one. I've seen a lot of people entertain this as an idea. I don't think we can rule it out until we clear 130k, then we can actually abandon that as an idea. But again, it's really, really important, okay? We are 95% of the way through this bull phase, which means you have kind of two options, right? Number one, accept that it is soon going to be time to start taking some profit. Or number two, say to yourself, actually, I'm going to bet that for the first time ever in history, a 4-year cycle low is going to cease to exist, right? Like, I wouldn't even bet against a daily cycle low not showing up, because we know that depending on the asset class, 70 to 80% of the cycle lows show up inside the expected window. That's what gives cycle trading such a powerful edge, right? I can say with 70 to 80% confidence, depending on the asset class, that we will have a cycle low inside of these windows, right? That's what the edge is entirely structured around. That's why we can consistently hit trades in front of everyone with public invalidation levels on this channel, because I have an edge that tells me 70 to 80% of the time I'm going to be right. So do I want to bet that this upcoming 4-year cycle low is going to cease to exist? No. If it was going to fall outside of the window, which of course 20 to 30% might fall slightly outside of the expected window, say plus or minus a weekly cycle, that would still be within the parameters of the cycle trading system, right? But notice the key difference here. Even if that 4-year cycle low shows up slightly early or slightly late, which of course 20 to 30% of the time it's expected to, that doesn't mean there's not going to be one at all, right? It doesn't mean one ceases to exist. It just means it took an extra weekly cycle or it formed an extra weekly cycle early. But all of a sudden, notice how a lot of people have just said to themselves, I'm going to take the bet that there is no more 4-year cycle, which to me is absolutely ludicrous. I look at this and I think, goodness me, like we have got face the music here a bit, okay? And that is, hopefully what comes next is a big rip-roaring rally, okay, and then a big trend line breakdown, and then Camel can say, oh, there's my exit signal. Thank goodness. Okay, we sold the top. We're heading for that 4-year cycle low. Of course, we'll be open to counter trend bounces along the way and other trade setups, but that's what I'm looking for here. But like I said, we've got to kind of face the music here because we are 95% of the way through the bull phase of this cycle, which means if what happens here is we continue to kind of chop and go sideways and range, okay, then by the time we get to September, October, November timeframe, okay, any kind of rollover from there is me having to admit
that we're not going to get the blow off top. And my worst fear this whole time is that this top is incredibly sneaky, doesn't occur with euphoria, right? And most people are just not going to be ready for it because they've only just showed up to the crypto market and they're unaware that a lot of market tops are sneaky, as I've also been talking about a lot lately. But for me, regardless of what the price does, it's like we've got a couple of months here of wiggle room at the most. And then it's time to face the music and say, well, this cycle's done. Right? And again, you don't have to copy me. I'm not suggesting anyone copy me. I'm not even suggesting I'm correct about this. I'm just saying I have a system and I stick to the system. And my system says, okay, I can only really justify being long and pushing the trade until it becomes unreasonable to do so for another couple of months at the most. And then by the time we're into the end of this year, I have to take what is for me the most probabilistic outcome. I have to take the bet that favors my edge, which means taking the chips off the table here and heading for that 4-year cycle low as my target to re-enter. So it's not very nice, right? But at the same time, historically speaking, the final couple of months yield the most upside. So it's all to play for here. But objectively speaking, unless you're a this time is different guy, then we have already used up 95% of this cycle in terms of time. And I also see, as I'm sure you probably know if you've been following me, a huge case for a bear market in 2026. And again, don't tar me with a perma bear or doomsayer brush because I've been publicly long the entire way up with receipts. Okay, I have made several top calls into local tops, but each one of those proved to be correct, right? I didn't just exit and the market ran away from me. I exited, the market crashed significantly, then we waited for momentum to return and I got back in lower down than I exited in every single top call. So it's not like I'm just some guy that perpetually calls the top or tries to spread fear, uncertainty, and doubt. But undeniably, there's a lot that is pointing at me and saying this is becoming increasingly obvious in hindsight, and I'm also noticing the sentiment is shifting so that this is becoming a contrarian stance. So one of the reasons I suspect this upcoming bear market is going to be enormous is that we are likely going to mean revert the most overpriced market in history. We've got the Buffett indicator at 217%. Okay, look at this. Way above the dot-com bubble and the 2007 GFC. The value of public and private equities to GDP ratio is also forming a lower high after the C9 print created a high over 50% above the GFC and dot-com bubble levels, right? Here's the dot-com and GFC. The C19 print popped us all the way up north of 330 odd percent. And since then, we're forming a lower high and looking to roll over to the downside. Okay, so one of the reasons I speculate we're going to have an enormous bear market this time around is because look how far the mean is, okay? This is the mean down the bottom right here, okay? This grey dotted line. That is the mean, and this is how far extended we are, okay? So at some point, the mean reversion is probably on its way, and it's a very long way down to get there. And then when we look at the Wilshire 5000 and the S&P 500, which of course are capitalization-weighted indexes, these capture approximately 80% of the available total stock market capitalization, which is therefore quite representative of the entire stock market. Now, intuitively, the stock market and the overall economy should grow at a similar pace. However, what we're seeing here is stocks rapidly outpacing GDP. There is a debasement component to this here, of course. But again, look at the rate at which the stock market has appreciated versus GDP. Okay, these valuations are absolutely bonkers. And if I go back to the first post in this thread, this whole thread I created last night having read this right here, which is that the US stock market has just hit its most expensive valuation in history, surpassing the dot-com bubble and the run-up to the Great Depression. So for me, historic overvaluation is preceding or about to precede a whopping great mean reversion. And that's why I think the bear market that's coming into the upcoming 4-year cycle lows is going to be so enormous. Now, in addition to this, okay, I am positing the US stocks are in a hyperwave in phase 4, okay? And that means that upon a breakdown of phase 4, the target becomes phase 1. Now remember, I don't make the rules, okay? This is just the technical target. This is no different to a measured move or a fib target or anything like that. But when hyperwaves violate phase 4, they tend to return to phase 1. It's a very long way down. It's about 70% on the way down. And if this continues to go higher, it may even be north of 75%. And I see a lot of people saying this is impossible, right? But that to me is exactly the type of complacency that you would expect to occur at the top. Absolutely nothing is impossible, right? Nothing is impossible in a market. And timing wise, okay, the big question is always when. And whilst nothing I have shown you so far is any good at predicting the when part, cycles are extremely good, as I was telling you about earlier, right? If you were to understand the rules of cycle theory, if you use any of the resources that I've made publicly available to everyone, you would understand the edge that they provide. And so because we have that edge, we can say with a very large degree of confidence that we are expecting the top this year. since we're heading for the 4-year cycle lows in 2026. So here are the 4-year cycle lows. Okay, we know the S&P is due its 4-year cycle low late next year, meaning similarly to Bitcoin that I showed you earlier, we have used up most of the bull phase of this 4-year cycle. Okay, it is time to start looking and expecting for tops to come in here, and time to start thinking about targeting much lower down into the 4-year cycle low. Now, in addition to this, Bitcoin has its 4-year cycle too. And again, we have already used up about 95% of the bull phase. Okay, so before too much longer, probably no more than 2 or 3 months away now, we're going to be expecting to see a major top come in and start to head for the 4-year cycle low for Bitcoin. And as if that's not enough, gold, which undergoes 8-year cycles, is also due its half cycle low in its 8-year cycle, aka its 4-year cycle low. You guessed it, right around the same time. Okay, so it's actually in the charts as far as I'm concerned that number one, we're expecting a major top this year. Okay, and number two, we're expecting all three of these major asset classes to bottom approximately the same time in late 2026, according to their major yearly cycle lows. And again, if you've been following the channel, okay, you should probably know this already by now. Okay, this has been in the charts, right? It's difficult for me to interpret this data and say, well, it's just a rip-roaring bull market, right? The 4-year cycle lows are going to cease to exist, right? It seems to be pretty obvious to me that this is getting extremely close now. And again, it's not a doomsayer post or a FUD or anything like that. I'm still publicly long and strong, right? We've gotten to the stage in the cycle where I'm having members DM me quite regularly to say, hey bro, just wanted to say thanks, like I'm up 40, 50, 60% in the last 6 months since following you. Okay, that kind of performance comes as we approach major macro tops, right? It's because everything is going vertical right now. So again, it's in the charts. Okay, I see a very compelling case. This is not just doomsaying and FUD. This is me publicly long and strong, but just letting you know the cycles say we're not that far away for some major tops. And I think, again, because of all the reasons I've shown you, because of the valuations, because of how far away the mean reversion is, the upcoming decline is going to be very large as we approach those major cycle lows. And it speaks to some kind of big global crash type event, because all three of those asset classes have their major yearly cycle lows in sync. And of course, by the time we reach those major cycle lows, I actually expect us to be at or near zero interest rates, and for a late and reluctant Fed to start outright QE and balance sheet expansion. This is what I believe will be the catalyst to find those major 4-year cycle lows and start to see a huge upside push out of those cycle lows. And again, if you think about it, right, this is not something I have just decided to come up with last night, okay, when I made this thread. If I pull up my old classic melt-up chart here, for those of you that are eagle-eyed or been here a while, because every once in a while I point to this pink text, okay, this has been here the whole time. And note the second line, the market will finally bottom when the Fed launches record QE, okay? So again, I haven't just coined this last night. This has been the expectation for years now. It just so happens we're approaching the end of these major 4-year cycles. Notice the next line, the bounce will form a lower high, okay? That kind of says to me that we are in the last final innings of the blow off top. Then we're going to violate spectacularly to the downside. Okay, then we're going to get the record QE out of those cycle lows. We get a lower high bounce and we get a lost decade of stagflation. Again, I did not just make this up now. This has been the base case for years. And you can tell that because it's been written here the entire time. Bounce will form a lower high, and then eventually it rolls over again. Okay, that's rolling over again. Lost decade, stagflation. With the collapse of everything, including the dollar, this is the controlled demolition part. Again, you will have heard me say controlled demolition a million times by now if you've been here any length of time. And the reason we believe in the controlled demolition is because ultimately the goal is to launch the CBDCs, digital IDs, social credit scores. Okay, so nothing has really changed apart from we've now elapsed enough time to kind of point to the cycles and say it may well be time to see this thing come tumbling down by the end of this year. Still long and strong, right? Still in this big kind of blow off top moment for the stocks, still looking to add on the way up. Okay, why would we bet against the trend until it breaks? Okay, so we're still long, right? We're still strong, and we still keep waking up every day thinking, oh wow, okay, I guess we're still going to keep going up. But all good things come to an end, remember. They're not that far away to go, in my humble opinion. VIX is also getting historically shorted, isn't it, by the hedge funds. They've been doing this for a long time. Going back a couple of years, we even had the Fed quietly shorting the VIX, which was pretty unprecedented, okay? But, I mean, we're heading down to that long-term sub-12 target towards the end of the year, and then it should be time for some kind of big risk-off moment. We're even seeing the breadth widen out here with the Russell Dot to push higher, so that's cool. And of course, gold looks like it's getting ready to squeeze out the top. Okay, no surprises there. We've also likely found an early weekly cycle low according to the indicator, so this will fully confirm once this thing can break to the upside. And of course, there should be time for silver to go. The miners are still leading the way as we keep covering every day. And last but not least, as I was saying earlier, you know, all we're waiting for now is for some confirmation of a reversal, right? We just need Bitcoin to turn around here. In fact, where's all my TA gone? Let's go to my data window, turn on my current TA. There we go. Okay, so this is all we're waiting for, right? We're waiting for a trendline breakout and then hopefully a good push. The indicator will pick that as a low. That will be a tradable swing for anyone that's not in, okay? Structured the same way as we always structure the cycle low trades, and it should be party time. So I know there's a lot of frustration out there, but really it should be this, right? It should be. And it doesn't have to be, of course. Like I was saying earlier, if we do just kind of continue to waddle around here, then sometime in this Q4 neighborhood, you will see me lighten up and start to target the 4-year cycle low. But to me, it just looks like we've got to push higher to be able to create space for having a significant 50+% decline to get back down to that kind of 70-ish K level for the bear market low. So, I mean, I could easily be wrong about that. Maybe we're going to go way lower and I just can't see it. But we'll find out, right? Either way, there's the 4-year cycle low. And when I zoom out like this, not that far away, really, is it? So yeah, anyway, that's my rant and ramble for today. I hope you're doing well in life. I hope you found value here. If you're a level 3 member, I'm about to post a midweek update for you guys. If you're a Slice Crew member, I'm about to post a Q&A video for you guys. And other than that, have a fantastic rest of the week. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel